The US dollar has maintained its position as the world's primary reserve currency for decades, a status solidified after World War II. The 1944 Bretton Woods Agreement established a new global monetary system, pegging major currencies to the US dollar, which could be exchanged for gold at a fixed rate. This arrangement reinforced the dollar's central role in international finance. Even after the collapse of the Bretton Woods system in the early 1970s, the dollar continued to dominate, supported by the strength and stability of the US economy. This dominance has provided the US with significant economic advantages, often referred to as an exorbitant privilege, a term coined by former French finance minister Valéry Giscard d'Estaing in the 1960s. These benefits include lower borrowing costs and the ability to run trade deficits without facing immediate economic consequences. In the wake of the September 11, 2001 attacks, the US increased its use of financial tools as instruments of national security policy. This strategy, sometimes called the weaponization of the dollar, involved leveraging the currency's central role to enforce economic sanctions and apply geopolitical pressure. The US government's control over international financial networks, such as SWIFT, the Society for Worldwide Interbank Financial Telecommunication, enabled it to monitor and restrict financial transactions involving targeted nations or entities. As a result, several countries began seeking ways to reduce their reliance on the US dollar, a process often referred to as de-dollarization. Countries like China and Russia have taken the lead in this movement. China has worked to internationalize its currency, the yuan, by promoting its use in global trade and setting up currency swap agreements with other nations. Meanwhile, Russia, facing economic sanctions, has sought to increase its gold reserves and engage in trade using alternative currencies. In recent years, China has significantly increased its gold reserves as part of its strategy to reduce dependence on the US dollar. The People's Bank of China has consistently been purchasing gold, with reports indicating that China's gold reserves grew for the sixth consecutive month in April 2023, reaching a total of 276 tons. This video explores China's strategy of gold accumulation and its potential impact on both the US economy and the global financial system. Specifically, we analyze how these actions limit the US's ability to counter China's rise and curb its economic and geopolitical advancements effectively. China's shift toward gold represents a major change in its approach to national reserves and global economic positioning. Historically, gold has been viewed as a store of value and a hedge against economic instability, and in recent years, it has regained prominence in national reserve strategies, especially amidst global economic and geopolitical uncertainties. This video provides an in-depth look at China's gold purchases, exploring the motivations behind this trend, its influencing factors, and its broader implications for global markets and international relations. China's relationship with gold has deep cultural and economic roots, which have evolved alongside its rapid economic growth and globalization. Traditionally, gold symbolized wealth, status, and prosperity, mainly used in jewelry and cultural artifacts. However, since the early 2000s, gold has taken on a more strategic role in China's foreign reserves. Between 2018 and 2023, China's annual gold purchases steadily increased, reflecting a clear and deliberate strategy to accumulate gold. Starting at around 250 metric tons in 2018, China's gold purchases grew to an estimated 550 metric tons by 2023. This trend has been influenced by factors such as economic stability, favorable gold prices, and heightened geopolitical tensions, particularly with the United States. As of December 2024, China's official gold reserves stand at approximately 2,264 metric tons, positioning the country as one of the world's largest gold holders. China's decision to increase its gold reserves is driven by several factors, including economic, strategic, and geopolitical considerations. A key motivation is the diversification of its foreign reserves. Historically, China's reserves have been heavily concentrated in US dollars, which accounted for about 60% of its holdings. By diversifying into gold, China reduces the risks associated with currency fluctuations and potential devaluations, enhancing the stability and resilience of its reserve portfolio. Gold also serves as a hedge against inflation and currency devaluation, preserving the purchasing power of reserves during times of economic uncertainty. Another important motivation is reducing reliance on the US dollar, particularly amid escalating geopolitical tensions with the United States. As part of its efforts to internationalize the yuan, China aims to encourage the use of its currency in global trade, further decreasing its dependence on the dollar-dominated financial system. This strategy challenges not only the United States' dominant position in global finance, but also provides China with an enhanced degree of economic autonomy. By amassing substantial gold reserves, China gains protection against potential U.S.-imposed sanctions or financial restrictions, which could otherwise threaten the stability of its economy. In doing so, China enhances its national prestige and financial security, all while reinforcing its image as a financially robust nation on the world stage. Large gold reserves serve as a symbol of economic strength and stability, making it clear that China is a key player in the global financial landscape. Moreover, these substantial holdings assert China's economic sovereignty, granting the nation greater leverage in international negotiations and strengthening its position within global financial institutions. The accumulation of gold aligns strategically with China's long-term economic planning, supporting key initiatives like the Belt and Road Initiative, BRI. By securing a stable asset base, China can finance large-scale infrastructure projects without the need for excessive reliance on external funding sources, especially from Western financial systems that might impose restrictions or tariffs. During the Trump administration, one of the most preferred strategies for countering adversaries was leveraging the dominance of the US dollar in global finance to impose sanctions. These sanctions typically restricted access to the dollar-based international trade system, often freezing foreign-held dollar reserves. However, by shifting away from holding dollar reserves and instead using alternatives such as gold or the Chinese yuan, CNY, China managed to insulate itself from the full force of dollar-based sanctions. Unlike dollar-denominated assets, gold reserves cannot be frozen or manipulated by the U.S. government, which makes it far more difficult for the Trump administration to economically isolate China or target its companies. The U.S. often used the threat of sanctions as a diplomatic tool to pressure countries trading with adversaries such as Iran or North Korea. But China's growing ability to bypass the dollar system, particularly through gold and alternative financial arrangements, made it much less susceptible to such pressure. This move complicated the Trump administration's efforts to diplomatically and economically isolate Beijing. For example, China's capacity to settle trade in non-dollar currencies, such as the yuan, and to stockpile gold as a reserve, significantly reduced its exposure to the global dollar system. This shift undermined the Trump administration's ability to exert economic pressure through dollar-linked sanctions. In essence, China's diversification of its reserves diminished the effectiveness of traditional U.S. economic tools, making it more resilient to trade pressures. The U.S. trade war with China, primarily focused on imposing tariffs and renegotiating trade terms, was also deeply tied to the central role of the dollar in global commerce. By imposing tariffs, the Trump administration aimed to make Chinese exports more expensive, benefiting U.S. producers and increasing China's economic vulnerability. However, as China promoted trade settlements in the yuan and built up gold reserves, it was able to reduce its dependence on the dollar system. This strategic shift weakened the U.S.'s ability to exert economic leverage through dollar-based tools. For instance, China's use of alternative payment systems and bilateral trade agreements allowed it to cushion the impact of U.S. tariffs, making Trump's trade war less effective. China's efforts to accumulate gold and decrease its reliance on the U.S. dollar were also aligned with its broader goal of fostering economic partnerships with nations disillusioned by U.S. financial dominance. Initiatives like the Belt and Road Initiative, BRI, offered an alternative economic framework that was less reliant on the U.S. dollar and more focused on yuan settlements or even gold-backed trade agreements. In contrast, the Trump administration's America First policies sought to undermine multilateral frameworks and prioritize U.S. dominance. But China's strategy of dollarization, coupled with its ability to use gold in international trade, provided a compelling alternative for countries seeking more independence from U.S. economic pressures. Nations wary of dollar sanctions found it increasingly attractive to align with China's economic vision. As a result, Trump's attempts to isolate China, particularly by warning allies against engaging with Chinese-led initiatives, met with resistance. Beijing's alternative economic systems, supported by gold and local currencies, created pathways for countries to bypass U.S. financial networks. This limited the U.S. administration's ability to use economic isolation as a strategic tool, significantly reducing the effectiveness of weaponized dollar diplomacy. Under the Trump administration, the U.S. also expanded its use of weaponized dollar diplomacy, leveraging the centrality of the dollar to restrict access to international financial networks like SWIFT. This strategy was a key part of efforts to curtail China's technological advancements, with a particular focus on companies like Huawei and sectors such as semiconductor production. However, by diversifying its reserves and settling transactions in non-dollar systems, China mitigated the risk of dollar weaponization. Gold, in particular, emerged as an untouchable asset that could serve as a cushion during times of crisis or sanctions, making it harder for the U.S. to disrupt China's financial networks or technological ambitions. The decision to increase gold reserves is influenced by several internal and external factors. Economic growth and the resulting foreign exchange surplus provide China with the financial capacity necessary for large-scale gold purchases. China's sustained trade surpluses generate significant foreign currency reserves, a portion of which is allocated to gold to diversify holdings and secure long-term financial health. Strong economic performance bolsters China's ability to invest in stable assets such as gold, which further aligns with the country's strategic goals of reserve diversification. Additionally, monetary policy and interest rates play an essential role in making gold a more attractive investment. In a low-interest rate environment, gold becomes an appealing alternative to fixed-income securities, prompting China to increase its gold purchases. In summary, China's strategy of accumulating gold and reducing its reliance on the US dollar has multiple layers. It strengthens the country's economic independence, offers protection against sanctions, enhances national prestige, and creates leverage in international negotiations. By aligning this strategy with key initiatives like the Belt and Road, China has positioned itself as a resilient, financially stable power capable of countering U.S. economic dominance. The ongoing diversification of China's reserves and the strategic accumulation of gold serve not only as a safeguard against external pressures, but also as a reflection of its broader vision to reshape the global economic order. The People's Bank of China has long been at the forefront of managing its foreign reserves, with a growing emphasis on gold as a crucial part of its strategy. This move is primarily driven by the need to enhance diversification and stabilize the country's financial system in the face of various global uncertainties. Geopolitical tensions, including trade disputes and the increasing risk of economic sanctions, are compelling China to secure its reserves with tangible assets, especially gold, to safeguard its financial security in a world full of unpredictability. Global market dynamics, particularly fluctuations in gold prices and mining output, play a significant role in shaping China's gold purchasing strategies. Gold prices, subject to regular fluctuations, often influence the timing and scale of China's acquisitions. Strategic buying tends to occur when prices dip, allowing China to optimize its investments. Meanwhile, the global supply of gold remains limited, and rising investment demand can drive prices higher. This makes the careful planning of gold accumulation essential for ensuring long-term reserve stability. At the national level, China's domestic policies, including mandates from the central bank and the role of state-owned enterprises in gold trading and mining, determine the scale and mechanisms of gold purchases. These policies ensure that the country's gold acquisition strategy aligns with broader economic goals, including the diversification of reserves and the strengthening of its financial system. The impact of China's large-scale gold purchases reverberates globally, influencing gold prices, market liquidity, currency dynamics, and mining operations. China's continuous demand for gold often exerts upward pressure on global prices, particularly during times of economic instability. This price surge can shift investor behavior, increasing speculative trading and further inflating the gold market. The consistent demand from China fosters a bullish outlook, attracting more investment in gold and related assets. As a result, liquidity in the gold market increases, enhancing its accessibility to other investors and nations, while contributing to global market stability by counteracting volatility and providing a reliable demand base. However, while China's buying habits bring greater liquidity to the market, they can also introduce volatility. Rapid increases in demand can lead to sudden price spikes, encouraging speculative trading and unpredictable market movements. Additionally, China's growing gold reserves and reduced reliance on the US dollar are reshaping global currency dynamics. As China continues to accumulate gold, it promotes currency diversification and supports the internationalization of the Chinese yuan, which could weaken the US dollar's dominance in the global financial system and pave the way for a more multipolar currency environment. The rising demand for gold, driven by China's strategic accumulation, is also pushing global gold mining operations to expand and innovate. This shift is transforming mining economies and affecting supply chains. However, with this growth comes the need for sustainable mining practices. China's growing role as a major gold purchaser raises environmental and regulatory concerns, necessitating the adoption of eco-friendly practices to mitigate ecological impacts. China's strategic shift toward gold has profound implications for the United States economy, particularly regarding the US dollar's global position. By diversifying its reserves away from US Treasury securities and increasing gold holdings, China seeks to reduce its dependence on the dollar. This process of de-dollarization is partly motivated by geopolitical tensions and the desire to insulate itself from potential US sanctions. As China's actions unfold, they highlight a larger shift toward reserve diversification. While the immediate effects on the US economy are complex, A gradual move away from the dollar by major economies could, over time, lead to higher borrowing costs and reduced economic flexibility for the U.S. Nevertheless, such a transition is likely to be slow, given the entrenched role of the U.S. dollar in global finance. Another key consequence of China's gold accumulation is the potential influence on U.S. financial markets and investor behavior. As gold gains prominence as an asset, shifts in investment portfolios could occur, with capital moving away from dollar-denominated assets. This shift could affect demand for U.S. securities, further complicating the economic landscape for the United States. On the international stage, China's gold accumulation has far-reaching implications for the global financial and geopolitical system. It could prompt shifts in the structure of global reserves, challenging the dollar's hegemonic status and fostering a more multipolar reserve system. This change would affect international institutions such as the International Monetary Fund, IMF, and the World Bank, forcing them to adapt to the evolving composition of global reserves. In the long term, China's growing gold reserves might spark debates on the future of the global financial system. These discussions could focus on the potential return to a gold-backed currency system or the adoption of commodity-linked currencies. While a full return to the gold standard is unlikely in the near future, given the logistical and economic challenges, the strategic holding of gold by major economies like China would still contribute to global financial stability, reducing susceptibility to inflation and market fluctuations. From a geopolitical standpoint, gold reserves provide China with additional leverage in international negotiations and strategic partnerships. Countries with substantial gold holdings are better positioned to engage in economic diplomacy, offering stable assets in exchange for political support or strategic cooperation. As China expands its gold reserves, it enhances its influence in global affairs, using gold as a tool for strengthening bilateral ties and securing cooperation from resource-rich countries. China's approach to reserve diversification also influences global trade agreements, as nations look to settle transactions in multiple currencies, or even use gold as a settlement asset. This growing trend reflects the broader shift towards a multipolar reserve system, and has the potential to reshape trade balance management and tariff structures on the global stage. Trade agreements may begin to favor countries with substantial reserves, ensuring more favorable conditions for assets like gold. Looking ahead, China's gold accumulation strategy is poised to continue shaping the global economic and geopolitical landscape. The country's annual gold purchases are expected to remain high, possibly exceeding 600 metric tons by 2025, with specific targets set for gold reserves in its foreign holdings over the next decade. The People's Bank of China may implement more flexible reserve management practices to adjust gold holdings in response to economic factors like inflation and currency fluctuations. Transparency in gold reserves and purchasing strategies will be essential to building global trust and stability, while domestic policies may encourage gold mining and recycling to ensure a consistent supply. Technological innovations in mining and urban mining capabilities will play a crucial role in China's ability to acquire and manage its gold reserves sustainably. Advancements in mining technologies can increase extraction efficiency while reducing environmental impacts, and the use of blockchain technology for tracking and trading gold can further enhance the transparency and security of transactions. Global economic and political developments will continue to influence China's gold acquisition strategies. Changes in global growth rates, political stability, trade relations, and environmental policies will all shape the demand and supply of gold, directly impacting China's purchasing decisions. Sustainability and environmental responsibility will also become increasingly important, as stricter regulations push for greener, more sustainable gold mining practices across the industry. In conclusion, China's growing gold accumulation strategy will continue to influence not only its domestic financial policies, but also the global market, shifting the balance of power in international reserves and currency systems. As China diversifies its assets and strengthens its global influence, gold will remain a cornerstone of its financial and geopolitical strategy, with far-reaching consequences for the international economy. Closing remarks. Thank you for watching this video. We deeply appreciate your time and support. If you found this content insightful or thought-provoking, please consider liking the video and subscribing to our channel. Your support means a lot to us. Feel free to explore more of our content and check out another video currently displayed on the screen.